the data supports it throughout all of the recessionary periods post-World War II. Home values seem to weather the recessionary market better than most assets. So just throwing that out there. I don't know if that's kind of a high-level answer to the question. I still go back to what we talked about many, many times before. If you can afford to buy a home and you're buying your home, your primary residence, I would get less caught up in where we are economically and where we are interest rate wise. Certainly you want to keep your personal financial house in order. You want to make sure you're making your financial decisions based on your job stability, you've got the income, you qualify. But in that example that we talked about in the first segment of today's show, that family could rent for $3,000 a month or buy for $2,500 a month. It makes sense to buy. And in the examples that we just talked about in the recessionary cycles, the home values went up. And the best part about buying now is if you believe the forecast that interest rates are going to continue to rise, by buying now, you've locked in that low interest rate for 30 years. So as rents go up and other inflationary pressures continue to affect your monthly expenses, the principal and interest portion of your housing payment is going to remain the same. That's never going to go up. Yes, taxes and insurance can adjust over time, but the lion's share of your payment is not going to change. So I want everybody to exhale, just exhale. We talked about this before. Interest rates moving from, 2.5% to 3% caught everybody by surprise. 3% to 4 to 4.5. And as we move into the fives, people are just, they're reacting. They're not responding. So look at your budget. Does it make sense? Can you afford it? Is this somewhere you want to call home? If all of those things line up, then it probably makes sense for you to go ahead and buy something. And on the other side of this, as rates continue to move up a little bit, it's interesting because some people are thinking we're at the peak of the value. There's going to be more sellers on the market. That may not be the case. There may be people who have refinanced in the last 2 years and have a 3% 30-year fixed rate, and they're not moving anywhere. They're happy with where they are. They're sitting tight, and they may even take some of that newfound equity and grab an equity line and put an addition on their home. So just because there's some uptick in interest rates, I wouldn't automatically assume that there's going to be more inventory hit the market because people are assuming we're at that apex, because when somebody sells, they still have to buy. So I share all that not to be pessimistic. I still feel like real estate's the best place to be. It definitely made a significant difference in my early life by buying a house instead of renting it. That's why I'm in the business. And it just cycles. That's all. That's, I guess, where I'm going with this. It cycles, and there's always a good time to buy and always a good time to sell, depending on your personal circumstances. And if you can afford the payment and it's a place you want to live, and that payment is fixed for 30 years, I would highly suggest moving forward before rates continue to move up. And then that's just going to put more pressure on your buy side. So to answer your question, recessions typically don't pull real estate values down. The biggest contrast to that statement is going to be the housing bubble burst of 2008, 9, 10. It depends on where you were in the country when you saw the biggest effects on it. That's why I give that range. But housing prices went down significantly during that time period. However, they led us into the recession, and the reason they went down wasn't because of the recession. It was for a whole variety of factors that I could talk for days on, and I would be happy to talk to you for days on it. If you have questions regarding that, give me a shout. 561-291-8569 is the Anytime hotline, and that number will go to my office during the week. Or visit the website, www.mr.mortgage. That's www.mr.mortgage. And we will be right back after this break with more of your questions. Hang in there. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review. we kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. And yes, call us now, 561-291-8569 is the anytime hotline, 561-291-8569. You can also shoot a text to that number, or as always, visit the website, www.mr.mortgage, www.mr.mortgage, never a .com. Just type in mr.mortgage. So in the spirit of questions being answered, I'm going to throw it back to Dom, my producer, and see what he has teed up for us.
All right, we have Manny who just called us with this. Manny's asking, I listened to last week's show a second time on the app. I still don't fully understand the bamboo toilet paper analogy. You were saying prices will go down?
Hey, Manny, I love that you brought that up. So if you're a regular listener of the show, you caught last week's episode where we talked about supply and demand, and I used a crazy analogy with the pandemic, and somehow I weaved it into the bamboo toilet paper that we were stuck buying at my house because that was all we could find. So, and hey, before I lose this thought, Manny, thanks for listening on the app. We are on all the podcast apps, so I'm super excited that you were either entertained enough or confused enough that you had to hit that episode a second time to figure out what I was talking about with the bamboo TP. But thanks again for checking us out on the podcast, and super excited to have this question, because I have to admit, I have had several comments during the week about, WTF, Mark, what about the bamboo toilet paper? Where were you going with that? So here's my point in all this. And this kind of spills back to Sherry's question about the recession. So everybody is so hyper-focused on housing right now. It's the biggest news outside of the pandemic in Russia. Everybody's talking about housing. And there's some really good data out there, and there's some really bad data. There's some people that are trying just to get attention. They're scaring you. It's clickbait. So what I want to share, and I'm going to go back to the bamboo toilet paper analogy just for a minute to answer Manny's question. When there is more supply than demand, prices go down. When there's more demand than supply, prices go up. Now, we talked about last week, we all went through the pandemic together, and there were some key essentials that we couldn't find. Everybody panic bought all of the paper products at the grocery store, at the convenience store. You couldn't find napkins, paper towels, toilet paper. We couldn't find hand sanitizer. You couldn't buy bleach. Anything that you used, either paper products or disinfectants, they were nowhere to be found. So what happened? We all went to eBay. We went to Amazon, and we bought whatever we could, wherever we could, and we paid whatever we had to pay to get them. And I will not forget this. There was a gas station convenience store that I stop at on the way home to get gas, and they had single rolls for sale for about, I want to say it was around $5 a roll. Now, they weren't price gouging. They paid a premium to get it. They were doing their client clients a service by providing it. But my point in telling that story was the bamboo toilet paper example had to do with what we found at CVS. CVS went out and did all of the consumers a huge favor, and they bought whatever they could buy. And they bought a bunch of this bamboo toilet paper. And it's awesome. It's good for the environment. There's a nice story around it, but it's expensive and it's strange. It's brown. It doesn't look like toilet tissue. But that was all that you could get at that time. So we started to use it. Now, when the Bounty and the Scott's and all of the other brands were back on the shelf, nobody wanted to buy the bamboo toilet paper anymore. There were many other choices. So more supply. That bamboo toilet paper, because it lost all of its demand, went on sale. And I still have a ton of it in my pantry because I'm a cheapskate and I bought it all on sale. And that was my point in that story. When there's more supply than demand, prices, and it doesn't matter if you're buying apples, if you're buying cars, if you're buying houses. If more people want to sell it than want to buy it, prices are going to go down. If more people want to buy it than want to sell it, prices are going to go up. Not until we get to an even demand and sales side of the scale are balanced are we going to see pricing stabilize. And that's where I think we're headed. I think the additional cost of money are going to put some people's purchase on hold because they're unable to buy the house they really want and they're going to wait and try to save more money. That's a whole nother conversation. Very rarely do people outsave appreciation, but I'm not going to go into that now. So once there's the same amount of demand as supply, prices will balance. I think that's where we're going. And that's where I started with this story is as money becomes more expensive, it may ease the demand on the buy side and level that cycle out and pull appreciation, which was just reported this week, year over year, 18%, which amazes me that we're still at, this clip. It's going to pull it back down to where it should be, 6%, 9%, 8%, somewhere in that range. So the bamboo toilet paper story was just the best analogy that popped into my head last week about supply and demand. So I hope that helps when you're looking for this inevitable real estate crash, which I don't think is inevitable. I think there's more demand than there is supply. So prices are supported. Even at 5% interest rates, there's more demand. And there's also demand from institutional buyers who want to buy properties and turn them into rentals. So that's another demand side of the equation that people aren't necessarily taking into effect. And when these Wall Street companies are moving blocks of cash to buy properties, they're less affected by a 30-year fixed rate mortgage. So there's a lot of demand in the market to indicate that prices are going to, at very least remain where they are. So Manny, that was where I was going with that story last week. I kind of like to break things down to very simple analogies that I can understand. I'm born and raised Florida boy. I spent my life on the beach and in the mud with my hillbilly buddies. So I have to have a story that I can wrap my mind around, and that's where I was going with that. And also, too, as we're talking about this, there's some people who say if interest rates hit 6%, the bubble's going to burst. I don't agree with that. I think demand will slow, and the reason I say that is, as I mentioned before, I started this career in 1999. During the housing frenzy of the early 2000s, which led us into that bubble burst. And this isn't me saying this. I did this research. These are the statistics. Over 40% of the mortgages used to purchase property at the height of the bubble were adjustable rate, high LTVs. Most of them were interest-only ARMs, adjustable rate mortgages, meaning that payment went up at some period of time, 12 months, 18 months, 24 months, 36 months, whatever it was, when the fixed period expired, that payment jumped, and sometimes significantly. That person had to sell because they couldn't afford to own that property anymore. Now today, adjustable rate mortgages represent less than 1% of the purchase mortgages in this market. So the people who are buying homes today are either paying cash or they're getting fixed rate mortgages that the payments are not going to adjust. So unless we get a spike in unemployment, I don't see where the pressure on housing getting led into a bubble bursting situation exists. That's just me. As long as unemployment remains low, I do think we need some wage side increase to offset some of this inflationary pressure for sure, because it's harder and harder for people to afford everything, not just a house. And that needs to be considered also when I'm talking all the time about look at